The 10 best stocks to watch next week. What is happening, investors? It is your boy Jack. I am not a financial advisor, and today we're doing a video we do every single Saturday. We're going to be having a look at 10 companies I will be keeping a particularly close eye on next week for one reason or another. We have some exciting companies in there today. There's one company we've never spoken about before on the channel at all. We have 3 EV companies, just because if you're up to date with the EV market right now, it was a particularly crazy week and a particularly red week. And we have 6 companies whose earnings are coming out next week, so it'll be worth keeping an eye on them, especially if you own a position in any of these companies. If you haven't seen one of these videos before, we keep things really quick because obviously it's 10 companies. You know, we're not going to be going in depth on any of them, but it's just to get some companies onto your radar to watch for next week. And I just want to say again, guys, thank you so much for 15,000 subs. We hit it yesterday. I appreciate you all so much. It genuinely does mean the world to me. The support lately has been absolutely insane, so just from the bottom of my heart, a massive thank you. I don't want to waste any of your guys' precious time, but just before we get into the first company of today, can I please ask you to smash a like on this video because it really helps me and the channel out. Hit that juicy red subscribe button if you're not a part of the family just yet. We're growing and we're going to keep growing, baby. And lastly, drop me a comment down below. Let me know what you think of the companies I choose today, and also let me know what stocks you are going to be watching next week as well. And with all of that being said, let's get into our very first company of today. So the first one we're actually having a look at, interestingly enough, is a SPAC stock. Bill Ackman's SPAC, to be specific. Now, if you don't know who Bill Ackman is, okay, he's an American investor and hedge fund manager. He's the founder and CEO of Pershing Square Capital Management. So this is actually the largest special purpose acquisition company ever, and that is with 200 million shares at $20 a share. Pershing Square will acquire between $1 billion and $3 billion for a total amount of capital of up to $7 billion. This is going to be massive. So right now, there's no company that they're intending to take over or merge with, but they will likely target 4 kinds of companies. A high quality, large cap company that could be better off for going an IPO process, a venture backed business with a notable scale that doesn't have as many private funding options, a large but distressed private equity portfolio company that needs an equity infusion, or large high quality companies impacted by the pandemic. So they popped as much as 9% in their first day of trading, and this is the first SPAC where we're taking no compensation, and it raised $4 billion in the largest initial public offering of its kind, and the ticker symbol is PSTH for any of you looking. And this guy has history. He's been down this road before. His fund Pershing Square Capital in 2011 helped Justice Holdings raise $1.4 billion, which it used the next year to merge with Burger King worldwide and take it public. So he may well be looking for a unicorn company. A unicorn is pretty much just a privately held startup company valued over $1 billion. And that's what I would expect the most likely outcome to be. I just think it's very exciting to see such a big SPAC coming out, okay? And I want to stay up to date with them and see, you know, who they decide they may want to acquire, because this will more than likely be very big. Not much more information on it right now, but it's one I want to put onto people's radars because I'm sure a lot of you guys aren't even aware this exists. Okay, now we're going to get the 3 EV companies out of the way, just because I spend a lot of time speaking about EV. So obviously we're going to be speaking about Tesla stock, okay? The reason I want to look at them next week is look on the 5-day chart. We're down on the 5-day, and if we go from 4 days, they're actually down 14.2%. And keep in mind, this was at market close at $16.50. It was up above $1,700, you know what I mean? And for Tesla, that's very odd, especially this last month or so. We're all aware of just how much growth Tesla has seen over the last month. And this is while they reported their 4th quarterly profit in a row, which now means that more than likely they're going to get included in the S&P 500. So all in all, it was actually a good week news-wise for Tesla. The conference call, the earnings was all very positive. There was loads of encouraging information out there, but they still went down. Now, the EV market as a whole went down, and you'll see that when we look at our next 2 companies. But I want to buy more Tesla, and after all that good news, seeing the company go down so much, I have to keep a close eye on them. I ultimately want to own a lot more Tesla than I do right now, so any considerable pullbacks, I will be snapping up at that opportunity. I don't think too much needs to be said about Tesla right now, especially if you follow this channel. I've spoken about them a lot lately, but that's Tesla. Workhorse stock. Now, these guys have actually outperformed the EV market in general over the last 5 days. They're actually up 4.48%, which is quite rare to see at the moment. But again, on the 4-day, they're actually down over 11% from the peaks. So by no means a good performance, but the EV market as a whole has been down. Now, Workhorse to me is one of my favorite companies in the whole world right now, and I have been loading up on them the last couple of weeks. I'm now up to 50 shares, so it's not exactly the biggest position in the whole world, but for me, it's getting somewhere and I do want to add more. And I think across the EV market as a whole, this sharp decline hasn't been too warranted. And again, this is a company who actually had some good news last week. I made a full video on these guys yesterday, and if you watch that, you'll know that they did actually get a purchase order in, which for Workhorse, I know it's only 20 vehicles, it's still a very good sign. But again, it was weird because it was a week where there was no negative news. In fact, there was pretty much only positive news, and they went down. So whenever something like this happens, it really does pique my interest, and I'm going to be keeping an extra close eye on this company. I mean, it literally is one of my favorite companies out there right now. The price action doesn't make much sense. I'm going to have to keep up to date with them. I mean, it makes sense. Now, I know I'm flying through these EV companies, but it's because I speak about them so much. I have full videos on them. If you want more information, just go onto my channel, you'll find those videos. Okay, but this one is particularly interesting, and this is what I made a full video on today. It's Tortoise Acquisition Corp, Hyliion, okay? 5-day chart, these guys down over 18%. Friday, down over 10%. And again, there was no particular bad news that came out. In fact, there was no bad news at all. In fact, there's been very little news at all. My main thesis on why this sell-off is happening right now is because a lot of people bought into this company because it's a SPAC. And everybody saw what happened with Nikola. Loads of people made 300, 400, 500%. This one came very shortly after Nikola. So a lot of people bought in blindly, did no research, and a lot of people would have ran away with 100 to 200% profit, happy. Then some people kept holding on, and they saw, right, it's starting to come down in value, I haven't done any research, I'm going to sell out for my 100% profit. And now people are saying, I'm going to sell out for my 50% profit, or my 20 or 30% profit. That's the main reason I think this sell-off is happening right now. I really don't think it's justified, but it's actually really exciting to me because I own a position in this company. I have a terrible cost basis. I only own 8 shares. It's a tiny position. I want a whole lot more. So if this sell-off continues, I am going to be loading up on this company. Now again, I'd like to point out I'm not a financial advisor. Pretty much all EV startups carry a large amount of risk right now. I have the hoodie that says I'm not a financial advisor, so don't take this as me saying you should watch this or you should buy them. I just think it's a very interesting position to be in right now. But I mean, I have kept up to date with these guys from day one, from the very beginning, and I have always believed in them. You'll know that if you've watched this channel over the last month or so. Right now, they have a market cap of just over $500 million. For this company, their prospects, the vehicles they have, the fact that they have physical products out there in the world right now, that seems extremely, and I mean extremely, undervalued to me. I did say in my video earlier, I more than likely will pick up a few shares next week, but if the dip continues, that's when things will get really exciting. When you start looking into this company, $500 million will seem ridiculously undervalued. Now, we have 6 more companies, and all of these are reporting one of their quarterly reports next week. Now, this week was awfully weird, right? There was a lot of companies who reported quarterly earnings, and a lot of them posted good quarters. Even some companies bet analyst predictions, posted really good quarters, and for no reason whatsoever, the price went down. The first company is Visa, okay, and their earnings are going to be coming out after hours on Tuesday. So I have a small position in Visa, a share and a half. And on the monthly chart, it has been slow. I mean, really slow. Like, really slow. Next to nothing has happened. Up 0.6% on the monthly chart, people. That is absolutely nothing for a company like Visa. On the 6-month chart, still down ever so slightly, but it's been a fantastic recovery from the bottom, up over 40%. When we look at the 5-year chart, this company has a good history of growth. I mean, pre-crash, 180% in under 5 years. Fantastic. Currently at a PE ratio of 35, okay? A market cap of 415 billion. Very big company. Everybody's aware of who Visa is. And I see no reason for their place in the world, for their growth to have to slow down. I really don't. If anything, I only believe that they're going to be worth more. That's obviously why I invested. With e-commerce on the rise and everything along those lines, Visa definitely has a place going forward in the world. So right now, analysts are actually estimating an EPS of $1.02 for Visa, compared to $1.37 in Q3 2019. So payment volume is expected to fall sharply, and I mean it's for obvious reasons, okay? It's because of the Roni. Keep in mind that these earnings that are coming out now will be from the peak of the virus. So obviously we're expecting EPS to be lower, but the real question is, will they beat expectations? That's what matters more. And it still is a very positive EPS. It's not like they're in a very struggling position. I just wanted to include this one because I know a lot of people are heavily invested in Visa and have a lot of belief in the company, so I just wanted to make sure you're all aware that this is happening. Me personally, I do like Visa. I don't ever see them taking up, you know, the biggest portion of my portfolio, but I'm happy to have a small amount of money in them. Okay, and on Tuesday, pre-market, we have McDonald's. McDonald's McDonald's has actually had quite a nice month, people. Keep in mind, McDonald's is a dividend paying company. They have a dividend yield of over 2.5% right now. And on the 1 month chart, they're up 8.73%. So they have had a good month. And on the 6 month chart, they're only down 5%, which all things considered, not bad whatsoever. I mean, McDonald's got hit very hard. They were pretty much shut down completely worldwide, and they're only down 5%. Now look, I expect a very poor quarter's earnings for McDonald's. I think everybody does, when they were literally shut down for months at a time worldwide. So Q2 estimates for second quarter earnings is pegged at 76 cents per share, indicating a decline from earnings of $2.05 reported in the year ago quarter. And I would expect analysts to have this one fairly accurate. I mean, you can just look at McDonald's average revenue, take away the amount of time that stores were closed. It should be fairly simple to get a good estimate on this. So I don't think there's going to be any particularly big surprises here, but I personally do want to keep an eye on them because I really do like McDonald's as a company and I do actually want to invest more. For me, growth stocks is the name of the game. That's what I'm really interested in as of right now, but I do also like my dividend paying companies. On the 5-year chart, McDonald's is pretty much up 100%, okay? And that's with a 2.5% dividend. That's really, really nice growth, people. And it has seen really, really nice growth since 2003. I mean, it's been absolutely fantastic with, you know, minimal severe downtrends. So I do expect earnings to be very bad. Very, very bad. But I don't think it's going to have the biggest effect on the company. But again, like I just said, I actually want to buy more McDonald's. So if I do see, you know, a decent little dip, I'll be inclined to pick up a share or two. I know not a lot of people are very interested in McDonald's, but these are the stocks I'm going to be watching next week, so that's one of them. Right, now we're moving on to Wednesday, okay? The first company we'll see, Facebook in the after hours. You guys already know, Facebook is my baby. I love them. And Facebook hasn't had a very good week by any means whatsoever, okay? Look at this, the 5-day, we're down, where are we? About 4%. So it's not like it's been crazy, but I mean, it's not good. On the 1 month chart, you all probably remember this big massive dip. It was going up quite nicely, but still, we're up 6.77% from the dip, and we're actually down 2% on the monthly chart. So there's a few worries surrounding Facebook right now, okay? One's the boycott, the ad boycott. I'm not worried about that whatsoever. I've spoken about that enough in the past, so I'm not really going to speak about it. So you all may be aware of this, the Google, Facebook, Amazon and Apple hearings. So a showdown between the US government and the 4 big tech giants, Amazon, Apple, Facebook and Google, is set to be postponed. So this hearing was due to question the company's dominance in their fields of e-retail, smartphone software, social media and search. I honestly think it's quite weird that this has been delayed. It seemed like such a pressing issue this week. So essentially all of the CEOs are going to be shown before an antitrust panel on the House of Representative Judiciary Committee. Now guys, antitrust issues have always been a thing. They've happened with these big tech companies for years now, okay? They really have. I do expect that this whole antitrust issue is a reason that the market is going down as a whole, is a reason that the Nasdaq in particular is going down as a whole, but I don't think it's necessarily justified, and I do think that all of these companies are ultimately going to be okay. I don't think that these issues are going to bankrupt any of these major tech companies. In the short term, it may take a hit, and if it does, you know, that's why I'm keeping an eye on them. I want to see what happens so I can buy some more shares at a cheaper price, hopefully. The case is developing slower than expected. Once on track to wrap up before the US presidential election in November, it now appears that the case will arrive afterwards, if at all. So this is something that's going to be going on for a considerable amount of time. It's honestly something that is always going to be going on. We can't get wrapped up in things like this. The investigation into whether the tech giant has broken antitrust laws continues to move along. This is going to be going on for a very, very, very long time. So the company didn't provide any specific revenue guidance for the second quarter of 2020, okay? Zacks consensus estimates from Yahoo Finance is indicating an increase of 2.5% from the year ago's quarter reported figure. So we're expecting a good quarter. If that's to happen, that'll be happy days. But I mean, Facebook is one of my biggest holdings. I'm always going to be keeping up to date with them, but especially with the news that is circulating and the fact that they're going to be having their earnings report, I'm going to have to keep up to date with them next week. Okay, so now we're having a look at Apple, okay? And Apple is coming out after hours on Thursday. So Apple has had a fantastic run on the 6-month chart, okay? We're looking up 19.9%, which given the times we're in is absolutely fantastic. And if we go down to the very bottom, they're actually up over 65%. So it's been an incredible run. Now, Apple, just like Facebook, is having some antitrust issues right now, but I won't repeat everything I just said. There are some other pieces of news though. One being that Apple may have to push back the iPhone 12 event until late October, when historically these generally come out around September time. Now again, this will largely be due to the fact, similar to McDonald's, Apple had to close down a lot of its stores. They had to close down an awful lot of their factories as well. Production had to stop, etc, etc. So they're behind schedule, but at the end of the day, most of the world is. Now, considering how well they've done on the 6-month chart, especially, you know, since they've started recovering after the crash, it wouldn't surprise me at all if we do see some sort of a pullback. I mean, even on the last month, it was really nice growth, okay? It was really nice until obviously this little bit of a pullback started to happen. There is a small amount of negative news coming out, but I mean, guys, it's Apple. And remember, we're long-term investors here. So in this particular earnings call, we're going to find out just how much damage was done over the Roni period. But that's what we're seeing pretty much with all of these quarters earnings. Again, it's not Apple's fault. The times are just catching up with us now. That's all that's happening. So February, Apple already announced that they would not hit its Q2 earnings range, okay? And that's for very obvious reasons, particularly associated supply constraints and economic slowdowns. It is what it is. I'm not expecting anything good whatsoever from Apple, and the fact that they've said they had to push the iPhone back to October isn't a good piece of news, and it's not going to necessarily fill people with confidence. Now, I am very long on Apple in the long term, so again, in the short term, we may see some red. We may short term lose a little bit of money, but it's going to ultimately give us buying opportunities if that is to happen, and I will be more than happy to add to my position. Again, Apple is one of the biggest positions in my portfolio. I think they're the third biggest as of right now. I really like this company. Now we're going to speak about Google, who's also coming out after hours on Thursday. Pretty much everything I said for Facebook and Apple stands for Google as well, okay? On the 6-month chart, Google is up 5.3%. So obviously doing better than the market as a whole, but as far as tech goes, as far as IT goes, as far as, you know, the FANG stocks go, it's not really performed very well. If we look down to the very bottom, we can see that as well. Now, it's up 43%, which obviously is absolutely insane. No doubt about it. But compared to its big peers, it hasn't performed incredibly well. Now, this is the smallest position I own in my big tech stocks, my Facebook, Amazon, Apple, all of those kind of guys. But I still do think in the long term, around this price point is very good. Again, nothing really exciting about them right now. That's why I'm not spending as much time looking into them. Again, the antitrust will cause short-term issues for Google, for Alphabet as a company, but we're going to get through it at the same time. Now, I don't want to repeat everything I just said about the other big tech stocks, so Google, they're on the list. And the very last company is one we haven't actually spoken about in a while. It's Exxon Mobil. It's XOM. They're coming out pre-market on Friday. Horrific performance on the 6-month chart, okay? Still down nearly 33%. With that being said, we're at a PE ratio of 16.3. I'm sure you're all more than likely aware of who ExxonMobil are. I mean, they're one of the most popular dividend paying companies in the world. Still currently sitting at an 8% dividend yield. They're an American multinational oil and gas corporation, to make things really simple. And again, it's a company who just on the monthly chart, it's been relatively sideways, down under 4%. So it's an oil stock, okay? And as Motley Fool says, oil stocks aren't going to be for everyone, especially not in the world we live in right now. We all know what's happened with oil over the last couple of months. I do like being diversified, and I do want a portion of my money in oil related companies, and ExxonMobil is probably my favourite, especially because of that 8% dividend yield. They're an integrated oil and gas giant that's built to survive disruptions like we're experiencing now. Even though ExxonMobil generates its juiciest profits, well, somebody else uses the word juicy than me. From the drilling and exploration side of the business, it can lean on its downstream refining and chemical operations when crude prices slump. So as one company, they're a relatively well diversified oil and gas company. So the company already shaved up to $10 billion off of its original $30 to $33 billion capital expenditure plans for 2020. So they took action very quickly, which is always what you want to see. It fills us investors with confidence. And in regards to that dividend, they've raised its payout for over 37 consecutive years. They're going to do everything they possibly can. So for you dividend investors, I do think this, as far as oil related dividend paying companies go, it's a safer one. And a lot of the biggest dividend paying companies are in the oil and gas related industries. Now look guys, to be honest, I'm not really looking to add to my position with Exxon, but if I am to put more money into oil related businesses, this will more likely be the first one. Aside from maybe enterprise product partners, I'd also be inclined to invest in them soon. I do think these guys are at a particularly nice price point, down 33.4% on the 6-month chart, PE ratio of 8.6, dividend yield of nearly 10%. I've spoken about these guys a good few times in the past, but I very much so like them, but they are midstream, so it could be a little bit longer before we see the recovery really start to take shape. But anyway guys, those are the 10 companies I personally will be keeping a very close eye on next week. So guys, as always, if you watched until the end, I really do appreciate you so much. You are a true legend. You give me the motivation to keep doing this, to keep uploading twice a day on the weekends. But really, I do genuinely appreciate it, and I do hope I'm able to give you some sort of value in these videos. And if you did watch until the end, keep in mind that this is just me trying to put some companies onto your watch list for next week. There was nowhere near enough information in this video to decide to invest in any one of these companies. And I mean, not even 0.1% worth of information to invest in any of these companies. On loads of the companies I spoke about today, I do have videos on them. Just search my name and the stock, and the video more than likely will show up, or just scroll through my page. You will find them, especially on the EV companies. I have loads of videos on them. But anyway, guys, again, I appreciate you so much for watching. I really do hope you have an absolutely fantastic day. I will see you for tomorrow's video. Peace.